in the case.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
You're tuned in to Money. This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Breast cancer touches millions of lives. Hi, this is Candy O'Terry inviting you to join me on Tuesday evening, October 15th at Newton Wellesley Hospital for their free conversation series. Hear from leading experts, radiation oncologist Theodore Hong, breast surgeon Michelle Specht, and nursing officer Jane Keefe. That's Tuesday, October 15th at Newton Wellesley Hospital. Register today. NWH Events at partners.org. That's NWH Events at partners.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 866-848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston, proudly presented by Veterans Development Corporation. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Friday. Welcome back to the Financial Exchange as we officially kick off earnings season here in October with some very exciting large banks reporting earnings, so we'll be diving into that. We also received an additional inflation report after yesterday's CPI reading, which, if you missed, came in a little bit hotter than anticipated. That's with the Producer Price Index, and I haven't had time to read it yet, but 6 minutes ago we've got a reading out on consumer sentiment as markets, which were slightly in negative territory to opened up positive here with the Dow and S&P so far in positive territory with NASDAQ off slightly. But I want to get first, Mark, to those incredibly exciting bank earnings. And if you cannot hear the sarcasm in my voice, these companies are effectively utilities at this point in time, subsidized and backed by the U.S. taxpayer. And so they don't generally do anything or tell you much that's incredibly exciting, although JPMorgan tries, or Jamie Dimon of JPMorgan Chase, that's his name, does try and spice that up a little bit by telling you that the world's coming to an end every 30 to 60 days. But generally speaking, well received on markets this morning after Wells Fargo and JP Morgan reported earnings. JP Morgan up over 5%, Wells Fargo the same here. Big picture, Mark, as rates have started to come down, beginning of a rate cutting cycle, any major takeaways you had from these two companies who reported this morning?
Let's just talk generally about the key metric of bank profitability, whether it's a big bank or a small bank. It's so-called net interest margin. You can think of that. Go ahead,
what
Mike.
banks do. They take your money and they lend it.
So it's just a spread. I'm oversimplifying a little bit. And you would think when rates were coming down, when the Fed lowers, I should qualify that. When the Fed lowers short-term rates, longer-term rates tend to come down. At least that's the immediate effect, but that hasn't happened over the past 4 weeks.
Exactly, the exact opposite, but yeah.
Except for the 5 million times that hasn't happened. No, but seriously, on average, the Fed easing reverberates down the so-called yield curve. We can talk about that later. We talk about the Fed. The point I wanted to make was you would think when rates come down that banks' net interest margins would suffer.
Because compression, right? If rates are coming down, you would imagine there's less of a spread.
You're making new loans, say you make a mortgage, you're able to get less for the interest rate is lower on that mortgage. You're paying out roughly the same, maybe slightly less to depositors. That spread historically, for small banks anyway, interestingly enough, but not large banks, has become has been subjected to pressure when the Fed is easing. So I guess the point I'm trying to make is that don't assume that just because the Fed is lowering rates, it's going to be a tougher net interest margin environment for banks. Large banks in particular, it's hard to say whether or not the Fed cutting rates is good or bad. Small banks, academics who've looked at this, and as you could tell, I looked it up this morning because Contrary to my history, when we talk about individual companies, I actually wanted to make a contribution to this segment. And my contribution here is don't assume that falling rates are necessarily bad for big banks with complicated assets, some of which are very long-lived. They're far less sensitive, as it turns out, to changes in the Fed funds rate than smaller or local banks are.
Yeah, so if you're a local regional bank, let's talk about why this would be, rates coming down would be a clear hit to the margin. Just think about your local experience. If you have money in your checking account, regardless of whether you're with Bank of America or Mark's Credit Union and hot dog stand, you're probably not making a whole lot of money in your checking account. And at that local bank, that net interest margin is, again, all that they do at that local bank is take your money and lend it out. They don't have usually wealth management divisions. They don't have investment banks. If you're Mark's Bank and hot dog stand, they just do lending and deposits. JPMorgan and Wells Fargo are very different companies in that regard. They have their own credit card businesses. They have their own wealth management divisions, some of the largest wealth management divisions in the world. They have their own investment banks. And when some of the perfect example here would be, did JPMorgan and Wells Fargo and all these banks lose all money, lose a ton of money in the 2010s? No, they were doing all right because even though net interest margin was quite low, they make all sorts of money on trading, wealth management, and investment banking in addition to what they see on net interest margin, which is quite frankly why these banks are so boring.
Yeah, so I guess for an individual investor, if you are concerned about the effect of falling rates on bank profits, larger banks, because of their longer dated assets, are less, their net interest margin is less sensitive. Academics who've researched this have found it. This is not my work. I'm just regurgitating the sort of consensus. They should be less volatile in a falling interest rate and falling profitability environment. And a bank, as you point out, like JPMorgan or Wells, if they've gotten their act together, may actually be able to do just fine because of their various business lines and sources of potential profitability.
But as you can tell, our general consensus here is that when you're talking about companies that are by definition and by law too big to fail, their earnings are kind of boring in terms of what they end up reporting. So banks have done quite well this year. Wells Fargo up 5.5% today, up 23.5% for the year. JPMorgan Chase up 5% today, up 30% for the year.
So both handily beating the broad market.
Yeah, the entire banking sector doing quite well this year, in spite of the new trend, which is going to be rates coming down. And again, the net impact on a bank like who in the last year, do you know anyone who has gotten a mortgage from Wells Fargo or JPMorgan Chase? I don't know anyone who has ever gotten a mortgage from Bank of America or JPMorgan.
Well, in our region, no, but maybe elsewhere.
But even Bank of America, which has a huge presence, nobody actually goes to them for mortgages from what I see because they don't tend to be competitive. And so the traditional banking, as I think of it, these giant banks don't do that much of it anymore. They just don't get all that much into the home equity line of credit and mortgage origination space. They leave that to other players, and they have bigger fish to fry in terms of giant corporate lending arms and different things that they do today. So
I don't know offhand what they're. If I had to guess, I'd say they have a substantial share nationally of the mortgage market.
Sure
they may have 30% in every market,
yeah,
and a bigger share in maybe big metro areas or areas where they're headquartered.
What I find incredibly interesting about, again, not every bank, but Bank of America and JPMorgan have made it a real point that they want to expand their physical banking presence. I know this isn't necessarily about their earnings right here, but that is a substantial reversal from where it seemed the industry was going over the last few years, right? I did a bunch of my banking through a brokerage firm where they didn't even have any branches. It was literally just an online bank checking account. What they seem to be finding here is a lot of people are okay with digital banking, but a prerequisite to opening a new account is having a local branch in their area, which
personally,
I agree with, on a personal level.
I ended up with TD because they have a bank in my town.
Tucker,
and they'll launder your money.
Tucker, they will. Yeah, they just got fined.
If you have any money issues, they'll clean it up for you.
Tucker,
I'm kidding. I don't want to slander them, although I just did.
And they were just fined a whole bunch of money for exactly
that.
So.
I'm also a loyal customer. I think they're absolutely fantastic. It's worth.
I mean, Tucker, would you open up a checking account, like a primary checking account, with a bank that doesn't have a local presence? Because I think even I, who am very comfortable with the digital experience.
Yeah, in this day and age, I have no problem with that.
You would?
Yeah, I wouldn't have a problem with that.
See, for me, it's the 1 in every 3 years that I actually have to go into the branch. I would be very,
That's
very
what
annoyed
caused
if
me
I
to
didn't have
change.
one.
It was a one in multi-year experience where I threw my hands up and said,
I can't remember the last time I went inside my bank.
You know, actually,
No
same
idea.
story. I have a colleague who was down in Tennessee for years, had an account with Wells Fargo, had an issue where he had to be at a branch, and guess what? There's 0 branches for Wells Fargo anywhere. I think Southern Connecticut.
That, Mike. If you need a debit card same day because you lost your wallet stupidly as I did, you will wish you had a branch within your area. Again, that's why I switched, but it's different for everybody.
Let's take a quick break. When we come back, we've had dual inflation reports over the last 2 days. I want to break them down and get Marc Fandetti's take on yesterday's all-important CPI report and what it might mean for the Federal Reserve. We'll be right back after this.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
To fully maximize your Social Security benefits, it's important to understand how Social Security may affect your taxes. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and when deciding to collect Social Security benefits, it's essential to consider how those benefits interact with your other income sources, your tax situation, and your long-term financial goals. As an example, if you have tax-free or after-tax options in retirement, you can structure your financial plan to manage your future tax burden. Collecting Social Security too early without careful planning could limit your ability to manage taxes later in life. Our new free guide is called Social Security and Taxes, and it unpacks these issues and more. Get your free copy today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Summer is over, so now's the time to start looking at a fabulous holiday vacation. And there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Mark, 1 week ago, according to the Chicago Mercantile Exchange, there was almost no doubt that the Federal Reserve would be cutting interest rates by 50 basis points. There was even a possibility of 75 basis points by year end. Yeah. Still, overall likelihood seems to be pointing for 2 rate cuts before year end here, with the final meeting of the year occurring on December 18th. We will see what plays out. But since about a week ago, we've now gotten a hotter than expected jobs report, 254,000 jobs created, with the unemployment dropping down to 4.1 or nearly to 4% if you round down. We yesterday got a CPI report, which was by no means catastrophic, but also didn't quite play into the Fed's narrative of rapidly shrinking inflation, rapidly disinflating. So talk to me about what we actually saw in the report yesterday, because we're continuing to get a lot of help from gas prices, which I personally enjoy quite a bit. But when you take a look at the numbers here, we're not in that perfect 2% range right now.
Yeah, I'll use the analogy of weight and weight loss because we can all relate. Mm-hmm. Sorry, I know this is my.
I haven't heard this one.
This
before.
is my old standby. Yeah, have I ever told you guys how I think inflation is like fat people?
He's consistent.
If you were trying to measure your progress toward a weight loss goal, you wouldn't look at the gain or the decrease over any short period, like a few hours or even a day. You would take a multi-day average, and you might take even a longer term perspective than that, depending on your goal and the time frame. And we all know from our experience with that progress can be reversed. You could see a good mini trend in weight loss, and you could have a bad weekend, and that sets you back. The inflation process is similar in that inflation price pressures, and by inflation we mean the change in prices. Prices have gone up by about 25% since COVID started.
Sure.
They're not going back down absent a severe economic contraction. We can talk more about those dynamics maybe at some point, but you asked specifically, where are we today? And it's really hard to say. Inflation has come down a lot. The rate of change in prices has come down a lot over the past 2 years or so. We know that.
Yep.
It peaked at about 9%. I'm using the CPI, the Consumer Price Index, as an example. There are others. Peaked at about 9. Now it's down to year over year about 2.5. I'm going to round up a little bit. That's really good considering there hasn't been a major economic calamity, which is usually what's required to get inflation down by that much.
Arguably every time you've seen inflation come down.
The estimated sacrifice ratio is somewhere around 3 percentage points of unemployment for every percentage point of inflation. That was roughly the so-called sacrifice ratio of the disinflation experience of the early 1980s. So by past disinflation standards, this was a miracle economically.
Yep.
Now, I know a lot of you, your lived experience is different than that. You don't think the economy's great. I get that. But this has been a really good disinflation in historical terms. So is the job done? Have we achieved the soft landing? That question isn't settled. And one reason for that is one point in yesterday's report, which is so-called core inflation, which is a better measure of what's actually going on with inflation because it strips out the erratic stuff. I'll go back to the weight analogy. If you're weighing yourself, you wouldn't do it right after dinner. You'd probably wait till the next morning. We all do it.
Sure.
Core inflation's a little bit like that. You want to strip out recent disturbances that are going to be fleeting. So core inflation was up 0.3% month over month. It's up about 3.5%. I'm rounding up a little bit over the past year. So core inflation's up a lot more over the past year than is so-called headline inflation. And if you look at another measure, of course, so-called median, which is literally just the price in the middle of all the prices that the Bureau of Labor Statistics
measure
surveys.
Thousands of them.
They do. And one way, we talk about median home prices and median salaries and stuff because you don't want the big outliers or you don't want the extremes on either end to distort the true picture, so you look at the median. Mike, you like to take 3 and 6 month averages and then annualize them. You do this all the time. That's why we call you 3-month average Armstrong internally.
Yeah.
If you look at the 3-month median, it's about 3.7% when you annualize it. 6-month median, 3.5%. So they tell a story similar to the recent history of core. So there are measures, Mike, and I'll wrap with this. There are measures of the trend in inflation, which researchers favor because they do filter out the noise that can distort the true picture, that suggests that inflation has settled down, but it's settled down a good percentage point to a percentage point and a half higher than the Fed's goal. And this is important. The Fed's goal is 2%.
Yeah. And you can't, unlike in months past, we can't look at any one item here and say, well, it's that darn shelter cost, for instance, that's just keeping core inflation higher. This was a big story that we talked about over the last several years. Like, we can see on other sources that rents are coming down and it's just not feeding into the CPI. Well, guess what it did? And inflation's still a little bit higher than you would want.
In your mind, we talk about this a lot internally.
Yeah.
It becomes a game of whack-a-mole.
Yeah.
We just got to get shelter under control. Great, we did that. It's, again, like dieting. I just got to cut out Doritos. Yeah, but you substituted it with 2 ring dings every day. So doesn't that suggest that there's something underlying all of this? The answer is, I'm being rhetorical, the answer is yes, there is. And it's the economy running in excess of its speed limit. That's what puts upward pressure on inflation. That was the key lesson of the 1970s.
Yeah.
Even though rates were high, they weren't high enough. And economic growth, it may not seem gangbusters relative to the 80s and 90s, but it's pretty strong relative to potential. That might be putting upward pressure on inflation, Mike.
So thus far, like I said, you've had a jobs report that came in hotter than expected, albeit nothing catastrophic, no massive wage spikes. And I would not call this inflation report catastrophic either. By no means is it catastrophic. But you do start asking yourself, like, all right, well, if we weren't getting all this help from oil prices, which we know do seep through to other costs ultimately, what would this all look like, right? If energy prices were moving upwards instead of downwards, what would this overall narrative look like and sound like? Because that's completely out of
Or what if they were just neutral
control.
Instead of down 7% over the past year?
So I think where I go with all of this, though, is I'm not sure how much this sways Jerome Powell and the other governors from their current path. They've been pretty clear about it. And furthermore, their data that they're going to get on both inflation and jobs for the month of October, in my mind, is muddied. I don't know how you feel about it, but looking at the way hurricanes have affected data in the past, I think the data you're going to get on both of these figures is going to be a little bit muddied in October at least, maybe in November. And so probably not enough to alter their path unless it's just a gangbuster inflation and jobs report.
Sounds like these guys are hell-bent on continuing to cut rates based on their public remarks. This is reminiscent of the 1970s. I don't mean to be so apocalyptic here, but we did make similar mistakes. We misread the economy's potential relative to what it was actually doing, and as a result, inflation kept popping up again.
Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Social Security and Taxes. Mike, first question to ask, how is Social Security taxation determined?
Well, it's dependent on all of your total income that you have in retirement when collecting Social Security. And they include the Social Security benefits in that calculation. But, generally speaking, if your only income is coming from Social Security, very little of it, if any, will actually be taxed when you go to file your return. On the other hand, if you have RMDs, maybe you're still working, you have capital gains, then it's possible that up to 85% could be taxed of your Social Security benefit by the federal government.
And in terms of the tax rate that you would pay on that portion that is taxed, how does that work?
Yeah, pretty simply, it's going to knock up against your regular brackets. And so we have the graduated income tax brackets, and you'll include that in the calculation of your adjusted gross income. Obviously, speak with a tax professional in regard to all of that. But then there's on the state level a bunch of differences too, because some states include Social Security income in taxation, others do not. Some include IRA distributions or pension distributions, others do not in their calculations. And so it gets more granular when you get to the state level, other than those few states that don't have any income tax.
Our guide this month is titled Social Security and Taxes, and the way to request it is by calling 800-393-4001. There's a whole bunch of this information in there and more that we didn't discuss. Again, this guide is titled Social Security and Taxes, and the number to call to request it is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in positive territories. Wall Street sifts through third quarter bank earnings unveiled this morning, in addition to the producer price index, which was flat for the month of September, below expectations. Right now, the Dow is up by 0.75% or 300 points. S&P 500 is up by 0.2% or 36 points, and the Nasdaq up by over 1/3% or 65 points. Russell 2000 up 1.33% as well. 10-year Treasury yield is flat at 4.09%, and crude oil is off 0.2%, trading at $75.36 a barrel. JPMorgan up by 4.5% after beating third quarter expectations and reporting a shallower than expected 2% drop in quarterly profit. Wells Fargo also said its profit fell less than expected, with net income dropping 11% to $5.1 billion. Wells Fargo up by 6% today, and BlackRock shares up by 3% after its earnings also beat analyst forecasts and said it now oversees a record $11.5 trillion of assets. Outside of bank earnings, Tesla shares down nearly 8% following its Robotaxi event last night that seemingly underwhelmed investors. Uber and Lyft stocks are seeing gains so far today in reaction to the event, after Bank of America said the event's conclusion ended 6 months of worrying about what it could mean for the ride-sharing stocks. And Stellantis shares are down by 3% after the automaker announced major management changes, including ousting its chief financial officer. I'm Tucker Silva, and that's Wall Street Watch.
Folks, if you haven't already signed up, time is running out. 2 weeks, almost a little bit less than 2 weeks from today, Thursday, October 24th. We're going to be doing a live broadcast of the Financial Exchange down on Cape Cod and Hyannis at the DoubleTree Resort and Suites. If you haven't signed up yet, you must sign up ahead of time. Again, it is a live broadcast of this show, the Financial Exchange, on Thursday, October 24th. Chuck and I will be down there, a whole bunch of team members from the Armstrong Advisory Group as well. Ed Lambert's going to be joining us. He's the host of the XTK Morning Show. And I'm personally excited because I'm going to be able to drive down to the Cape in fewer than 3 hours for once. So this is going to be an exciting time. You're going to join us for the live broadcast of the Financial Exchange Show. Following that, we're going to be doing a free educational lunch from the Armstrong Advisory Group. We'll be taking your questions, talking to you about the upcoming election, state of markets at the moment. We're having deep conversations right now, obviously, about inflation and unemployment and where all of that might go, as well as policy proposals from both the Harris and the Trump campaigns. If you'd like to join us, again, the date is Thursday, October 24th. You can go to armstrongadvisory.com/events, fill out a form there, and we'll sign you up. You can get more information there as well. But once again, it's Thursday, October 24th at the DoubleTree Resort and Suites in Hyannis. You can go to armstrongadvisory.com/events or call us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark, I've maintained that if we get to year end with both inflation and unemployment under 4.5%, then I'm calling it a soft landing for 2024. Ultimately, an economy never actually lands. It's constantly evolving and changing, but that's been my attempted definition of what this would look like for a temporary soft landing, at least. Federal Reserve is meeting next November 7th, right? Day after the election, I believe it is, and they will be setting policy. There's been some talk now of Fed governors maybe disagreeing a little bit with the direction of the path, and it's going to probably get more challenging here now that you've got these two reports, and you will get just one more jobs report before that next meeting, as well as the PCE inflation metric. But what do you suppose the conversations are going on behind closed doors, and where would you be? Obviously, neither of us are on the Federal Reserve, but where would you be leading this conversation?
It seems like, as we talked about in the last segment, they're determined to continue to cut rates. They're highly confident in their view that disinflation will continue. We talked about reasons why that might be wrong. You talked about the big special factor, energy prices. Food prices can serve this role as well, but energy prices are the historical special factor culprit. They can push inflation up and distort the true trend. They can pull it down and distort the true trend.
And that's been the case for the last couple of years.
It would seem that to be, it would seem that has been so. So, Mike, I don't know. And I don't think look, we're not privy to the information that they're privy to. I tend to be opinionated about this type of thing because I don't know enough about it to be nuanced, to be honest. They get, I take a sort of textbook. This is what they taught us in college and after college, if you had the privilege of studying it later. This is what they taught us. This is what the models say. I'm limited to that.
Sure.
So I see growth faster than trend or potential. I see unemployment very low. And it's not clear to me that these are circumstances that would normally be associated with a disinflationary environment with price increases easing. They may have information. They know these models as well as I do. Some of them wrote papers on which the textbooks that I read are based.
Sure.
So, I'm not going to claim to know more than a PhD academic now on the Federal Reserve. If it doesn't give them pause, part of me says, why should it give me pause? But at the same time, go ahead. Rambling.
No, you're fine. I mean, my point is much the same as yours, which is over the last few years, I thought that the Federal Reserve was too slow to raise rates, didn't go far enough, quickly enough, and then kept kind of having moments where they declared victory here and there, or at least alluded to a path to victory sooner than they should have. And I've been critical all along the way. To be fair to the Federal Reserve, the level of disinflation that we've seen so far, I didn't think was possible. Given the path that has happened,
Mike.
I thought that was completely impossible to get there. And they've been proven right on that one factor.
I think they got lucky. I think special factors, as you talked about, energy prices have helped them a lot. Supply chain unsnarling helped them a lot. And to their credit, I've not heard any Fed official take credit for the disinflation without economic sacrifice that we've experienced over the past 2 years. And the reason you and I and others didn't think it was possible is because it's never happened historically. Again, going back to my favorite analogy, weight loss analogy, surprise. It'd be like saying, I'm going to lose weight. I'm not going to change a thing.
Yeah.
So,
I mean, were I in the Federal Reserve and I'm sitting on these two reports, I would be a little bit hesitant about the path downwards. And for a few reasons. One, jobs report is looking like the labor market remains a little bit tight here. That could shift rapidly, and if it does, then you can always continue your way down. The other piece about this would just be, I hate talking about political uncertainty, but here's something that actually seems relatively certain. Whether you have a Republican or Democrat administration taking control of the White House next year, and assuming that the House and Senate follow suit, which is not a sure thing at all, but assuming they do, what does it look like to me from an economic policy perspective is either a whole bunch of tax cuts or a whole bunch of spending. And so if you're worried about inflation, underlying inflation, contributing to the overall growth of prices in the future, and you add that on top of it, of the government suddenly either piling more money into people's pockets via tax cuts or piling it into people's pockets via stimulus measures of one sort or another, then we've seen how that plays out as well. And so, that's not the Fed's job to grade what Congress is going to do in the future, but they will have to react to it in the event that that's what occurs here. And so, I don't know, there's a few pieces in my mind, especially after these last couple of reports, that I think at least give you pause to wonder, will we be seeing these lower mortgage rates and the Fed cutting rates by, I think, the Chicago Mercantile Exchange, I think, still has 1.5% of rate cuts priced in by this time last year. Let's go ahead and take a quick break. When we come back, I want to move on from inflation and Fed talk a little bit, and I do want to just get to a little bit of conversation about this bull market that we've been marking the 2-year anniversary of bull markets. A few stats on the state of markets that last this long and what might be next for this equity market. That's next on the Financial Exchange.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. If you run a small business, mismanaged inventory can be a major problem for you and your customers. SAB Solutions Incorporated has been a trusted advisor in helping companies with inventory management for more than 15 years. Using real-time data and digital technology, SAB Solutions can transform your traditional storeroom into an intelligent warehouse, making your business operate more efficiently. For more information or to ask for a no-cost assessment, visit us online at sabsolutionsma.com. That's sabsolutionsma.com.
Breast cancer touches millions of lives. Hi, this is Candy O'Terry, inviting you to join me on Tuesday evening, October 15th at Newton Wellesley Hospital for their free conversation series. Hear from leading experts, radiation oncologist Theodore Hong, breast surgeon Michelle Specht, and nursing officer Jane Keefe. That's Tuesday, October 15th at Newton Wellesley Hospital. Register today. NWH-events at partners.org. That's NWH-events at partners.org.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
To fully maximize your Social Security benefits, it's important to understand how Social Security may affect your taxes. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and when deciding to collect Social Security benefits, it's essential to consider how those benefits interact with your other income sources, your tax situation, and your long-term financial goals. As an example, if you have tax-free or after-tax options in retirement, you can structure your financial plan to manage your future tax burden. Collecting Social Security too early without careful planning could limit your ability to manage taxes later in life. Our new free guide is called Social Security and Taxes, and it unpacks these issues and more. Get your free copy today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island. Spots are filling up fast, so register today at dav5k.boston and help us support these great American heroes. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Two stories here, one from Market Watch, the other from the Journal, I believe. Both arguing, I guess, other sides of where this market is right now. So the first title here, the market has been fabulous, maybe excessively so. And then the other from Market Watch, New York Times. Okay, the 2-year-old bull market has just done something that shows it has further to run. So different perspectives, obviously, on the market from these two pieces. How would you measure, before we get into what the market has done, how would you measure where we stand today in terms of a real metric that actually matters, as opposed to, say, the Dow's at nearly 43,000 at this point in time, which is just not a terribly useful metric when considering the price of equities?
Yeah, I guess one way to answer the question is to ask a slightly different question and then answer it myself, which is how expensive, I think you were saying this basically, how expensive are stocks right now? And when we say that, we mean, are they excessively high relative to earnings? Because in the past, that's been a bad omen.
Sure.
We all know what happened after the tech bubble. It was a decade's worth of negative returns. The 2000s were a lost decade for U.S. equities.
Mm-hmm.
There were plenty of places to make money.
Sure.
Which is why it's important to be diversified. But, Mike, today let's use the so-called Shiller PE. That's a guy, Shiller, Nobel Prize winning economist. He didn't win it for this, but he developed this simple measure of whether or not stocks relative to the past 10 years of average inflation-adjusted earnings are expensive or not. And right now it's at about 37. All you have to know is that that's the third highest after 2000, right before or during, the COVID crisis. That's the third highest level it's ever reached.
So we're in company with the 90s before the tech bubble.
Yeah.
2021
Roughly
before
99.
2022 fell apart a little bit, and now.
Yeah.
And granted, we've been in this general area for a good year, right? It's not like we have,
Yeah, we've been here before in this cycle, and it didn't result in catastrophe.
Sure.
It did. This was 2022. It did result in a serious retreat. Now, this wasn't the cause. But the more expensive stocks get relative to past earnings and prospective earnings, the more sort of fragile the market becomes. It suggests over-optimism. And if the economy doesn't cooperate, then...
Does it tell you anything about timing?
No. I think it's, as you pointed out, Mike, and as many people have pointed out, this measure, I'll call it the Shiller PE out of an acknowledgement of the guy that created it, has been higher than its pre-1990 average since 1990. So if you were waiting around for stocks to get as cheap as they got by this measure, in, say, the early 1980s, you would have been out of equities for the past 3.5 decades.
It's an important distinction. I remember at my former employer hearing about this fund manager who actually, in hindsight, spotted the mortgage crisis. He spotted it in, I think it was something like 2004, and starting in that 2004 time period, started shorting real estate companies and banks and all sorts of institutions that were related to mortgages. And he turned out to be right, but I think he was fired in 2007. He was running a fund, and he was calling for this mortgage crisis to all fall apart. And again, he was correct. He was right about the actual fundamentals, which was there was clearly a bubble going on.
Yeah, a lot of guys in the late 90s, so-called value managers like Jeremy Grantham here in town, they saw the bubble.
Yep.
They started warning about it in 96, 97.
And then they lost their investors.
Lost a lot of
boatloads
clients.
of money.
You probably never heard of them because they're mostly on pension fund rosters. Almost went out of business, but they were right. Then they had a spectacular run for the next 10 years. So there is an argument for being a little contrarian, favoring seemingly out of favor asset classes. And by asset class, I just mean broad investment group. And Mike, we talked about Shiller PE. There are other measures like 10-year annualized returns. So what have the stocks done on average annually over the last 10 years?
Sure.
The number now is a little over 13%. That's quite high by historical standards. The average return for stocks over the past, say, 100 years is closer to 11. And the average 10-year rolling return is closer to 11 as well. So no matter how you slice it, stocks are looking pricey. Now, if AI is the miracle productivity and economic growth enhancing technology that its proponents make it out to be, then maybe stocks are reasonably priced.
Could be.
Probably not.
Don't
though.
know.
Probably not.
History would say no.
Yeah,
history would
very
say
fair.
no.
That's very fair.
But who's to say? Another contradictory point here that I don't find terribly useful, but the average bull market since 1950, and we're 2 years into this bull market, right? If we had a correction in 2022, the bull market started really in October of 2022 that we are currently sitting in right now by that one definition of it. This bull market's 2 years old. The average one since 1950 lasts more than 5 years on average and gains more than 180%. I find that a lot less valuable than, compared to other historic times, how pricey are stocks right now. I don't think you can really use anything to say, oh, yeah, well, the average bull market lasted 5 years, so of course this one's going to last another 3. I don't think
all
so.
measures, I think, of valuation are a little bit arbitrary. That seems really arbitrary and untethered to anything fundamental, though.
Yeah, just how long the average one lasted
that
and how
seems
much
really
the average one went
loosey-goosey.
up.
Yeah.
It's just not... Again,
that'd be my least favorite,
terribly
Mike.
useful.
Of all the flaky measures out there, that's my least favorite.
Wall Street pros apparently avoiding election bets with race too close to call. Here's my only question about this. Mark, if you knew who was going to win the presidential election and then somehow knew who was going to win the House and the Senate.
Which I do, yeah.
Would you have any idea how to invest based on that?
No, we talk about this a lot. Even if you knew the next quarter's GDP, could you guess how markets are going to react to it now?
I would find this. I just find these stories, and there's
Mike,
there's
they gotta
many
write
of
about
them.
something.
No, but here's the thing. I actually do experience this, right? Like people actually feel choice paralysis, and companies are reporting on it ahead of election. And it has nothing to do with necessarily Wall Street.
It's a little
bets.
different though. If I had a business whose the success of a certain potential undertaking depended on the regulatory regime, then I would be sweating this.
Yeah, I could
Say you're
see
in
a
crypto,
perspective
for example.
there.
Trump now loves crypto.
Sure.
He's going to put government money into it. He's starting a business himself, all a little bit weird. That said, maybe it's not a bad thing to pile on the crypto train if the guy wins. He's clearly going to throw government money in favor at it.
There's, I guess there's a few pieces that I can look at. But generally, the choice paralysis that I see, like people saying, hey, I'm just going to put off my vacation until after the election. Like, what? Individual investors that I speak to
are you on the
saying,
ballot?
but Delta is speaking to this. Like, yeah, no, we're expecting a decrease in flight bookings around the election because we always see that. And I just scratch my head saying, why would you delay a flight? Why would you?
Unless you're going to D.C. and you want to avoid the ransacking.
Why would you not buy a couch because you're worried about the election?
that's weird.
I scratch my head at it. It's very strange. Let's take a quick break, but a lot more to cover in the second hour. We'll have a full market recap and more. Stay tuned, folks.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
Stronger, more powerful.
we have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston, proudly presented by Veterans Development Corporation. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
This is Tucker Silva, the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning and welcome back to the Financial Exchange on a Friday as we close out a busy week with data, with inflation coming out yesterday with the CPI report, earnings kicking off this morning, and markets in positive territory. We got the Dow up 299 points, 0.7%. S&P up 32 points, 0.5%, and the Nasdaq up about 58 points, or 1/3%. Those small caps, the Russell's up 30 points, about 1.4%, and the yield on the 10-year Treasury actually moving down very slightly below 4.1% after what's been a pretty big jump in the 10-year since that jobs report last Friday, 1 week ago. I'm just double checking that I didn't screw that up there. But yeah, 1 week ago we got that jobs report. And since that, let's see, report on October 4th? October 3rd, you've had yields jump on the 10-year from about 3.85 up to over 4% now. And just over the last month, you've seen them go from about 3.6 up to 4.1 at this point in time. We got producer price index this morning, which some look at as sort of a leader into consumer price index and overall inflation. As you can imagine, if you are a producer of goods and you're seeing prices increase, you will eventually pass those through to consumers. Month over month, no big change here, and the unadjusted change is about in line with where we are with CPI. About 2% to 3%. So no big shock from anything that I saw in PPI. And quite honestly, I just don't follow it closely enough to have much to add to it.
If you look at the research, which nobody does except people interested in this, if you look at the academic research in this area, everybody uses CPI and core CPI. And more robust studies use things like the median, which we talked about in trim to mean. But no, PPI is probably because it's highly correlated with and thus doesn't give you additional information, is not paid much attention to in the studies that look at inflation behavior over the long term.
Mark, I want to attempt to answer the age-old election question. Are we better off financially than we were 4 years ago? It's the age-old question that everybody likes to ask this time of every 4 years. Are you better off than you were 4 years ago? 4 years ago brings you to October of 2020 when we were still in the thick of COVID and at a very, very different point in time. And quite honestly, I don't think that's how people are really considering things this time, because we have a pretty unique election at this point in time where, end of Trump's office was through COVID. Now you have no incumbent necessarily running for president right now. So it's a little bit different than the average time you ask this question. But how can we attempt to answer this question with actual numbers?
I don't think we should. I wrote down a bunch, and as I look at them, I could tell you that GDP grew faster under Biden than Trump. We lost a lot of jobs under Trump, gained a lot of jobs under Biden. But those conclusions are very sensitive to the start and end points. Plus, if you feel like Biden's leadership on economic matters has been weak or wrong, you don't care. I could tell you unemployment when Trump left office was 6.4-ish. Now it is 4.1. But you would retort with, I don't care. Number one, I don't. Or maybe you would retort with, maybe you would respond with, I don't trust your numbers. I've gotten that one too. Mm-hmm. So I've sort of stopped quoting averages to people because they just don't reflect that indefinable sentiment that in the very early 1980s specifically was called malaise. Mm-hmm. Anybody who was around at that time remembers the word malaise. It's this indefinable, uneasy feeling about the state of things. Jimmy Carter's economy was not terrible. In fact, in real GDP terms, his I laugh because you're not going to believe it. I have to look it up every time I say it. His economic growth record was about as good. Reagan's was slightly better, sure, but about as good as Reagan's. Mm-hmm. It was just this now inflation was going up. Yep. There were a bunch of foreign policy debacles.
And that might be the lesson here. Inflation was going up.
Inflation kills. Yeah, inflation just kills you, whether or not it's the incumbent administration. It certainly wasn't Jimmy Carter's fault. Malaise, Mike, is my response. And if you're feeling it, there's nothing anybody can tell you to make you feel differently.
Objectively, if you take a look at any number in terms of income, inflation-adjusted income, GDP, stock market, any of those actual raw numbers, if you were to compare October of 2020 to October 2024, I'll just tell you, you're going to look better in 2024 than you did in October of 2020. And you almost always do 4 years later look better in terms of both income and inflation-adjusted income. The problem is when you take a look at October of 2019 compared to October of 2024, that's much more of a mixed bag. Still, from an inflation-adjusted income perspective, you are likely better off. But when we think about, how things were going, what the trajectory was like pre-COVID compared to now 2024, I think that's the more apt comparison that voters are making as they head into the ballot box.
Yeah, I think we could. First of all, anyone who didn't like the conclusion would say, well, you're just manipulating the numbers. You're cherry-picking starting and end points. Again, that we are better off today than 4 years ago using any inflation-adjusted metric is irrefutable.
True.
But whether that's your experience, whether you credit, say, the current president for that is deeply personal. So, I'm the biggest fan of using aggregates to take a snapshot at a point in time because we don't have anything better as anybody else out there. But I also acknowledge these numbers may not reflect your lived experience. I don't have data that reflects your lived experience. It's pretty personal, I think.
Point in case, according to a survey, nearly 40% of Massachusetts residents, one of the most liberal states in the country, say that they are financially worse off now compared to just a year ago. And so
I wonder what they mean. Like, how so? You make less money in real terms. You feel like your standard of living is lower. Those are two different ways of saying the same thing. I wish we could probe a little deeper. Or you just don't like the way things are going.
I can think of a few reasons compared to a year ago where 40%. My student loans had to start again. I stopped getting stimulus checks. I stopped getting unemployment around this time a year ago. I'm not saying that those would be good policies to put back in place, but if I'm thinking about how do I compare today to a few years ago and all these income metrics that we use? Well, most of those income metrics that we use exclude things like one-time payments from stimulus and people were getting that stuff poured on them a few years ago.
That's in GDP.
Yep, in GDP, but probably
GDI,
not counted in
excuse
median income or anything like that. And so I do get why 40% of even Massachusetts residents say
I'm not
worse
questioning people's response.
Sure.
This is subjective.
Yeah.
I'm just wondering if you dig a little deeper, what is it specifically? Because we are in a historically...
It's inflation and now the resumption of kind of a more normalized economic period, right? We've experienced higher prices now, and all the stuff that we came to the rescue over the last few years to help us out with the shutdowns and then the inflation, it's all gone. And so, yeah, there's a bunch of people that are feeling like things are worse off for them, whether or not it's, fundamentally, numbers-wise, actually the case.
I guess my final comment for now on this, until the next segment anyway, is it's not going to get much better than this, folks. We got 3% unemployment in this state. We've had about 3%, a little under than that, GDP growth nationally over the past year. Most researchers think the economy's speed limit based on labor force growth and productivity growth, which is what determines potential GDP, is a lot lower than that. So we're growing at faster than potential. Our little tachometer is in the red zone in the economy, as evidenced by somewhat stubbornly dug in core inflation that we were talking about earlier. Mike, I don't think it gets much better than this, and I worry about people who think the economy's really bad right now, or even just middling, because it's not middling. It's actually, in historical terms, really good.
Yeah.
I'm not saying you should recognize that and what is wrong with you and why aren't you voting for Kamala Harris. I am saying we're in real trouble if people are struggling now, and we're going to need some dramatic policy changes to, support them in the event things really do turn down.
Let's take a quick break. When we come back, we're going to have a little bit of trivia for you, and then a new argument for you to have with your boss. That's next on the Financial Exchange.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
To fully maximize your Social Security benefits, it's important to understand how Social Security may affect your taxes. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and when deciding to collect Social Security benefits, it's essential to consider how those benefits interact with your other income sources, your tax situation, and your long-term financial goals. As an example, if you have tax-free or after-tax options in retirement, you can structure your financial plan to manage your future tax burden. Collecting Social Security too early without careful planning could limit your ability to manage taxes later in life. Our new free guide is called Social Security and Taxes, and it unpacks these issues and more. Get your free copy today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Breast cancer touches millions of lives. Hi, this is Candy O'Terry inviting you to join me on Tuesday evening, October 15th at Newton Wellesley Hospital for their free conversation series. Hear from leading experts, radiation oncologist Theodore Hong, breast surgeon Michelle Specht, and nursing officer Jane Keefe. That's Tuesday, October 15th at Newton Wellesley Hospital. Register today. nwhevents@partners.org. That's nwhevents@partners.org.
The ultimate Boston sports auction to benefit the Disabled American Veterans Department of Massachusetts is coming. Your chance to see the world champion Celtics, the Bruins, the Red Sox, and the Patriots, plus autographed merch from Pedro Martinez, Kristaps Porzingis, Brandon Carlo, and much more. One massive auction, 4 incredible experiences, and all to benefit the Disabled American Veterans Department of Massachusetts. The auction begins on November 4th at 11 a.m. only here on Money Matters Radio AM 1120 and FM 102.9 WBNW.
Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood, void where prohibited, dine in only. Another day of candy trivia here on the Financial Exchange. In the 1980 comedy classic Candy Shack, a prankster throws a chocolate bar into the golf club's pool. The swimmers mistake the candy bar for something smelly and gross. Trivia question today. What kind of candy bar did a prankster throw in the pool in the movie Caddyshack? Once again, what kind of candy bar did a prankster throw in the pool in the movie Caddyshack? Be the eighth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword there, Applebee's, in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385, and the eighth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
For some reason, I was really under the impression that coming up with an entire month of candy trivia was going to be a challenge for Ben. And I don't think he's even stretching here.
He's been waiting for this.
Yeah, I don't think it was even a remote challenge for him to come up with 20 shows worth of candy trivia. But nonetheless, interesting way of kind of categorizing how Americans feel about conflict. A survey was done, and I'm very interested to hear how they asked this question, but the median American worker would give up 1.75% of their wages in order to avoid conflict. We're talking about, asking for raises and dealing with awkward conversations with bosses and just how many Americans are so averse to those conversations that, to me, are just kind of a normal part of any business, talking about where my wage goes and where my opportunity for improving that wage is. But apparently a big, and I do get like how it would be really challenging to bring up these conversations if they are not being managed by your firm in terms of, hey, every year we have a performance review where we discuss your wage and where it's going to be going. That would be fairly awkward to bring up if it weren't automatically being done for you. And every company that I've ever worked for, it's been just part of the normal process of being an employee there. I don't know, Mark, like, what would the strategies be? To me, the strategy, if I'm not getting that conversation from the boss, it's immediately go shop myself.
I think
shop, not shot. Shop.
It is difficult to know how to approach salary negotiations because they're not really a negotiation. It's pretty much unilateral. So my approach has always been, I'd like to make more money, but I think you know better what I'm worth to the firm. So let me suggest a few ways of being more productive, more additive to the bottom line. You tell me what I need to do to make more money. I've always tried to put it in the employer's court.
Right.
That's never worked. But no, I'm kidding. Sometimes it works, sometimes it doesn't. I think look, it is difficult.
I am surprised that you still work for us for course credit. I've just it surprised me like that. You're still furthering
I've
your
earned
degree.
3 bachelor degrees from Northeastern in my time here. It's a tough conversation though, Mike, because sometimes your manager has a budget with which to work, and giving more to you means taking money away from somebody else. And being someone who's a little conflict averse myself, nobody likes uncomfortable conversations, but I especially don't. I feel rude asking for more, to tell you the truth.
So you would fall into this category of worker that would give up?
No, I wouldn't give up any. I think you probably think you're slightly overpaid. If you would be willing. No, and again, that's just the median response. There are other
interesting ways.
I didn't think that's where you were going with this article, because he goes on to talk about why people. This is a somewhat different topic. Why people don't like inflation and how that right. That's part of this article, right? I did. I jotted that down correctly, didn't I? So this is kind of a wide-ranging survey.
I think it does speak to why do people hate inflation so much? Is because on average it takes conflict to get your wage to keep pace with it. And by conflict, I mean either you need to have a tough negotiation with your boss, or you need to change jobs and move and do these things that are, by their very nature, conflict and challenge.
So if you're up for a review right now and you know inflation was up 2.5% over the last year, and you get 2.5%, that means your real wage is staying constant. You can buy the same amount on average with your new wage as you could with your old wage. If you get less than 2.5%,
you're losing money.
Stopping the clock today. Yeah, your employer might be trying to tell you something, and I think it's okay to ask them, okay, I'm getting a real wage cut here. Is that indicative of my performance, or am I misreading that?
There's 2 ways to look at it. Either that's indicative of my performance, or it's indicative of something going on with the company.
Because one argument for inflation that macroeconomists make is it allows employers to cut real wages almost imperceptibly, because people say, I got 2%. It's better than nothing. I'm better off, even though you're not in real terms. And that allows wages to reach a so-called equilibrium, so they don't actually have to lay anybody off. I don't know how much truth there is to that. The evidence is sort of mixed for the economy as a whole. But just be advised, if you get less than inflation, you're behind the 8 ball in real terms, and it might be worth pushing back is the wrong term, because that sounds a little bit aggressive, but asking why.
So moving on to a whole new subject. I know how excited you were, Mark, for last night's big event. I think you whipped out your special Tesla tequila. You had your flamethrower ready to go. These are all products that Elon Musk has sold, if you're unfamiliar with. I think there was a cologne, too, at one point or another, but definitely a tequila, definitely a flamethrower.
He's got 11 kids, so it's apparently working.
Yeah.
There's something in that cologne.
In any case, he had his event last night at 7 p.m. Pacific time, 10 p.m. Eastern, so I don't think a ton of people on the Eastern Seaboard got to tune in. But among other items, showing off a Robotaxi that he's hoping to price under $30,000, as well as the weirdest looking bus that I've ever seen. It looks like something out of some sort of cyberpunk futuristic movie. Generally speaking, investors not terribly excited about what he had to say based on what the price of its shares are doing this morning. To me, everything that they did here was perfectly reasonable and I think exciting, and in many number of ways that, hey, there's a vision here for a driverless car to actually be usable in the near future. The problem, as far as I'm concerned, is there is absolutely nothing concrete coming from Elon Musk in terms of when they're even going to start manufacturing this type of thing. And he's developed a pretty notorious reputation now of not meeting his own deadlines. In fact, I think he joked about it at the event last night, saying, yeah, I'm hoping to have this manufactured in the next 2 to 3 years, but I do have to acknowledge that I've sometimes been optimistic about my own timelines.
Yeah, shareholders are, I guess, taking it with an appropriate dollop of caution. The stocks, they're not all, some of them are just traders in and out, but the stock's down, 8% today. So the market's rendering its verdict is what
not
I'm saying.
terribly
We know to
exciting.
discount things that we know he's Mr. Hyperbole, right? And prone to sort of fantastic, self-aggrandizing visions. A genius, but also somewhat of a con artist.
Yeah. Let's take a quick break. We're going to have the trivia winner when we return, as well as a conversation about Boeing's debt. Where's it going next? Will it get downgraded? That's next to the Financial Exchange.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all 3 and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Social Security and Taxes. Mike, when we talk about incorporating a Social Security strategy into a financial plan, what are some of the considerations?
Well, the consideration that everyone likes to focus on, and for good reason, is, hey, how do I maximize my benefits over my lifetime? If I live to a certain age, when's the best time for me to claim Social Security? Because obviously you have a wide range. You can start as early as 62, as late as age 70, and depending on how long you live, there's a calculation to figure out what would be the most benefits you would receive over your lifetime. But I would argue that for most folks, that's probably not the most important consideration to be making.
What is the most important one?
So I would be focusing on the impact of certain items to the success of your financial plan. So for example, if you look at your plan and say, wow, if I face a lot of inflation in retirement, maybe just because prices in general go up more than I anticipate, then delaying Social Security in order to get a larger base on which COLA is adjusted could be a really positive impact to your plan. On the other hand, if you have a shorter than normal life expectancy or a longer than normal life expectancy, both of those come into play as well when figuring out the appropriate time to claim that Social Security benefit.
Our guide this month is titled Social Security and Taxes, and the number to call to request it is 800-393-4001. Again, the guide that's available this month is called Social Security and Taxes, and the number to call to request it is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All right, today's candy trivia question revolves around the movie Caddyshack. What kind of candy bar did a prankster throw in the pool in the movie Caddyshack? Well, that would be a Baby Ruth. The golf club's maintenance man, as we all know, Bill Murray, is tasked with cleaning out the pool and discovers that the alleged duty is, in fact, a Baby Ruth bar.
It's no big deal.
It's two winners to announce today. Winner of the Financial Exchange Show t-shirt was Kevin from Brentfield, Mass. And the weekly winner of the $100 gift card to Applebee's was Diana from New Britain, Connecticut. So congrats to both winners there. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mark, on Tuesday of this week, S&P Global Ratings said they're considering downgrading Boeing's debt to junk status. Moody's last month announced they are considering a similar move. Fitch has highlighted the risks, but not yet announced an actual review of Boeing's debt. Embarrassing. It would be the single largest U.S. corporate borrower to ever be stripped of its investment grade rating if it did come to pass. Practically speaking, why does it matter, other than just the true embarrassment of what's supposed to be a great American manufacturer being considered junk?
Yeah, it matters mostly for Boeing. They'll be paying higher interest costs, and their profits will be lower.
Because, I mean, they have a bunch of bonds that are outstanding now.
Just think about your own experience. If you get dinged in your credit score, your rate goes up. Similarly, when a borrower gets dinged by a credit rating agency, their rate goes up, which means their profits, all else equal, go down. Now, it may be that they're implementing an aggressive turnaround plan and investors believe in that, and that pushes rates down. It's always hard to tease out the actual effect of something like this. So there's that direct, immediate, and obvious effect of something like this. And then less obvious, but you might find this interesting if you have a pension or you have a 401k and you own a bond fund. You own a bond index fund maybe. You think this is safe. It owns 6,500 or something securities in the so-called Bloomberg aggregate index. And we all have some exposure to that. Boeing is in there today, but it might not be after the downgrade.
Yeah, it would get booted from a whole bunch of indices and as well as actively managed funds.
Insurance companies can't hold it anymore. Their ratings are the gold standard or are a highly rated security is the most avidly sought after a bond in an insurance company portfolio. Quite income. They're quite needy of high quality, high income paying securities. So this will reverberate a little bit throughout the investment management world. You won't feel it, but there will be managers scrambling to switch up their portfolios if this happens.
The point would be, even were you convinced that, look, it's Boeing, the U.S. government's going to have their back, they're going to bail it out, and I would argue with that because there's been previous bailouts where bondholders and stockholders have been wiped out and the government just backs the company, but who knows what format. But even if you were convinced of that, by mandate, if you're a fund manager, you might not be allowed to hold junk debt. That could be in your prospectus. Say, no, we don't go after junk debt.
Yeah.
We are not allowed
That's
to hold
right.
it for our insurance company or for our pension or for whatever
insurance
it
companies
might be.
almost without question can't own it.
You're not allowed to own it. In some cases, probably by law. I don't know. You think about pensions and the PBGC eligibility. You might, by law,
you can buy junk bonds if you're a pension fund. They often make allocations to them.
Okay.
But your current managers may not, if you have an investment grade quality portfolio, when you get downgraded to junk, you're by definition no longer investment grade, so you're forced to do something.
Get the boot, and then good luck. Yeah, when you go to issue new debt as a junk bond holder. What do you have for us, Mark, that you want to talk about? Desperate
Do you guys
workers?
go on LinkedIn? Yeah, thank you. Do you ever use LinkedIn?
I
Keep
do.
up with old colleagues and.
Yes.
My brother likes to wish everyone a happy birthday via LinkedIn, and he just sends really formal messages to like family
Happy birthday.
members.
Please advise.
LinkedIn introduced this open to work feature whereby you could advertise yourself to anybody or just recruiters.
I've seen that open to work
there's
banner,
a little
on people's faces.
There's a little, and the point of the article is that looks desperate, don't do it. And I tend to agree.
Well,
what about you?
I have less of an issue with open to work, but now there's actually banners that instead of saying open to work, they actually say desperate. It's not. It
doesn't say hashtag.
It
desperate.
says hashtag desperate, as in
That's-
no longer just open to work. I'm now desperate to work.
Seems a little aggressive.
I
Pump
don't.
the brakes.
Well, let's put it this way: I wouldn't not hire somebody because they had a desperate to work banner on there. I might be a little bit hesitant to recommend that person for a job at my company if they had a desperate thing on a banner on their page, though. I don't know. This might be a step too far. Furthermore, like if I'm a hiring manager and I'm interviewing somebody with the desperate banner, aren't you going to lowball them?
Yeah.
Right? Like,
I mean, you said you're desperate, so I mean, this shouldn't be a problem. Then, right?
I know you were making 80, but I think, based on what you said on LinkedIn, maybe 50 would do the job here. What do you say? I don't know.
Excellent point.
I get the point. You want to stand out. It is it's probably more difficult to stand out as a worker today than almost any time in history, given the way that we sort through job resumes and things like that right now.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Cushing and Dolan are experts in elder law, and they can help you protect your assets from probate and the nursing home. By naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing and Dolan right now by calling 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. The number again is 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Before we move on from the desperate workers story here, which, again, I find interesting that we are hearing a lot about the challenges of this labor market now when you've got unemployment at 4%. It's just shocking to me. The 4 people that are interviewed in this article, again, just looking at a very small trend here, you have people almost entirely working in graphics and the arts. So they interviewed one person who's a senior art director in motion graphics. You have another person who is a graphic designer and illustrator. Another who, works as a screenwriter and producer. And then finally, another one that's an artist looking for work in the fine arts industry.
Good point. Good point.
I don't have anything, but like that in and of itself isn't shocking to me, like or doesn't tell me anything. I don't know that the arts industry or the graphic design industry in particular is struggling right now.
No, I don't think there's anything you can glean from this in terms of.
My only takeaway though is it does seem like low-hanging fruit for artificial intelligence. I'll just throw that out there when we talk about graphic design and the type of boring artwork and design that corporations do, I don't think they care how original their logo design looks, so long as it looks usable and is cheap to design. And that's like a key component of what artificial intelligence is truly able to do today. And so, again, you can't say anything about this, but I'll be interested to see, if we take a look at where people are unemployed, where the highest unemployment rate is, and how long it's taking for people to get jobs. If you're seeing anything on the graphic design space, that does speak to artificial intelligence a little bit to me. We'll see. I have no evidence, and this is one article from the Wall Street Journal interviewing four people.
That's why I didn't really get into generalizing. I was more interested in your take on people advertising themselves very promiscuously as available for work or apparently desperate for work.
Yeah, to me, again, I just think the desperate piece crosses a line there where, as the name implies, desperation.
Yeah. There's no good connotation.
Whereas,
no good interpretation of that
open
word.
to work, to me, that reads, hey, this person cares, they want a job, they are driven, they want to go find a job, and they're advertising themselves. Desperate, to me, reads, what's wrong with this person? Why can't they get a job? What's holding up so much? So, I don't know. Let's take a quick break. When we come back, Paul LaMonica from Barron is joining us here on the Financial Exchange. That's next.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud member of a military family, including my father, Victor, and my brother, Timmy. Serving my country was one of the greatest achievements of my life, and it's why I choose to give back to this special community. My father built Veterans Development Corporation, and I am honored to continue his legacy of working to help many disabled veterans and their families. It also gives me great pleasure to once again be the presenting sponsor of this year's DAV 5K Boston. I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
To fully maximize your Social Security benefits, it's important to understand how Social Security may affect your taxes. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and when deciding to collect Social Security benefits, it's essential to consider how those benefits interact with your other income sources, your tax situation, and your long-term financial goals. As an example, if you have tax-free or after-tax options in retirement, you can structure your financial plan to manage your future tax burden. Collecting Social Security too early without careful planning could limit your ability to manage taxes later in life. Our new free guide is called Social Security and Taxes, and it unpacks these issues and more. Get your free copy today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Joining us now is Paul LaMonica from Barron's. Talk to us about not exactly a household name, Cognizant. Paul, thanks for joining us. Appreciate it. You catch some of the Aurora Borealis down in New York City last night, or was it too bright?
I missed it. No, I'm in the suburbs, so I should have been able to see it, but I just didn't get out of the house in time.
Good news. If you go onto Facebook, it's the only thing on there.
My fair share. Exactly.
Yeah, you won't have missed anything. Talk to us. What is this company? Like I said, not exactly a household name for probably the average person. Cognizant, ticker symbol CTSH. What do they do?
Yeah, this is a company that does outsourcing. Primarily tech outsourcing for the financial services and healthcare industries. But they are by no means a slouch. This is a company with a market cap near $40 billion in the S&P 500. So it's, not a household name, definitely, but a pretty significant company in its industry. What's interesting is that they're based in the U.S., Teaneck, New Jersey, just outside of New York, but they employ most of their workers in India. And I think that is one of the reasons why the stock may have lagged this year. I think there's a general sense that both Donald Trump and Kamala Harris are going to push, whichever one of them becomes president, for more insourcing, nearshoring, more jobs closer to the U.S., if not exactly in the U.S. And that's something that has been a concern. But, I spoke to the CEO of Cognizant, and he's confident that, the company will be able to withstand any of these macro challenges.
They also just reported a pretty big merger or acquisition here in the defense space. Can you speak to that a bit?
Yeah, definitely. I think that's one of the reasons why analysts are excited and why the company is excited. They bought a company called Belcan, which does a lot of technological solutions, outsourcing for aerospace and defense. So they have contracts with the U.S. Navy, with Airbus, with NASA, other big defense and aerospace companies. And that's an area that Cognizant hasn't really been playing in. They've been more, like I said, in the financial services and healthcare areas. And I think it's no secret that, companies around the world, including the U.S., are looking to step up military spending. So that is something that could give Cognizant a further revenue boost over the next couple of years.
You alluded to this, Paul, but obviously company has not performed well, and at least in part in your eyes due to some political risk that certainly is out there. Just how big of a discount is this? We just got finished talking about the historical premium Americans are paying for stocks today. Almost. Well, as high as it's been in, say, 2021 and, pre-dot-com stage, but there are still pockets of the market that are relatively cheap in comparison. Where does Cognizant fit into there?
Yeah, Cognizant trades for just 15 times 2025 earnings estimates. It typically does trade at a discount to the S&P 500, but it's now trading at an even bigger one. And as you noted, the overall market is pretty pricey, about 21 times earnings for next year. So this is a company that, again, there are potentially some political headwinds, but I think that's factored into the stock price at the multiple it's trading at right now, and earnings growth is expected to accelerate over the next few years.
Paul and Monica from Barron's join us today to talk about Cognizant, the outsourcing firm with 3/4 of its employees currently based in India, and the struggles they face this year. But Paul, appreciate you joining us. Thank you, and we'll talk to you next week.
Thanks a lot. Have a good one, guys.
I want to go off script a little bit. Did either of you see any of the highlights from the TikTok? I'm going to call it the leak on TikTok from the Kentucky Attorney General's office.
No, I have no idea what you're talking about.
Really? Okay.
No idea.
No, we didn't just talk about this off air, Mike.
Well, you and I did, but Tucker,
I was out
this
and
is new to
about.
Tucker.
Yeah.
So the Attorney General for Kentucky, among I think 16 other states, is in the process of suing TikTok for all sorts of stuff, harm to kids and misleading the public on a whole bunch of things. And so they've been in discovery with TikTok and getting a whole bunch of documents. NPR went and requested the documents and got a whole bunch of things that were redacted, as is very common, right? When you're in the middle of an ongoing case, a lot of stuff is privileged, and you get to redact a whole bunch of...
blacked out.
Yeah, blacked out.
So you can't read it.
From what I understand, somebody at the Kentucky Attorney General's office screwed up and didn't appropriately black it all out, and so when somebody literally just copied and pasted it, all the blacked out stuff magically appeared, and TikTok's obviously furious about this, saying, quote, "It's highly irresponsible of NPR to publish information that is under a court seal," which apparently this was, but they did it anyway. And so we have all this documentation of allegations from the company as well as internal memos. And just a few of the highlights that I saw mentioned here. One, they mentioned some of the timeout things that they put on there, like timers and other items to get people off of the app. And there seemed to be some internal memos basically saying that, hey, we are just doing this to appease the general public, and it doesn't actually do anything. There's other memos seemingly admitting or alleging that the company has its algorithms favor more attractive people on the TikTok algorithm to make sure that, ugly people aren't showing up on the TikTok stream. The number of videos that they believe it would take to get somebody addicted to the app is about 260 videos, which sounds like a lot, but since these things are about 8 seconds long, it's basically in 35 minutes, the average user is likely to become addicted to the platform. That's a quote from one of these documents. And there was one other pretty messy one that, just a lot to do with kids and mental health on the platform, and just, a bunch of allegations that seem to me reminiscent of the tobacco industry in the 90s, I guess it was, when all those things were coming out.
Yeah, actively disinforming the public, smokescreen after smokescreen. This does nothing, I think, but confirm what we already knew about TikTok. Never mind the national security dangers of letting them continue to operate. People who adhere to niceties like free speech, which doesn't seem to be applicable when national security is under threat, but they would let one company, in the interest of free speech, an important right but not the only one, undermine every other right that we possess. It's just staggering that they're allowed to continue to operate, and kind of shameful.
Yeah, we shall see. Hopefully that is not something we need to continue to talk about in 2025, but only time will tell. Markets remain open and strongly in positive territory, with the Dow leading the way up 355 points, over 0.8%. We will be back at it on Monday. Banks are closed. Stock market is open. We'll be doing a show on Monday, so stay tuned and have a great weekend, everybody.